All right, so another very interesting week in the markets. We had a lot of big news. I want to talk about this article from Howard Marks and basically the general idea of are we in a bubble or not as far as the stock market goes. I want to talk about the MSTR news, not getting into the S&P, and then I want to talk a little bit about Bitcoin. So first things first, if you get value out of the video, please like and subscribe. Check out the links below as usual. So let's talk about this article or the idea that are stocks in a bubble right now? And Howard Marks, who's a very famous investor, has voiced up his opinion on this recently. And let's read about it. I'll give my thoughts. I'm not going to read the whole thing because I don't want to make this too long. So basically says he sees investors making one major mistake in today's market. The billionaire investor says he believes U.S. stocks are in the early stages of a bubble. His firm is adding credit to its portfolio, he says, urging investors to pick up more defensive assets. Investors today are doing one thing wrong, assuming the market won't or can't change. The single biggest mistake I've been thinking a lot is that the way things are today is the way things always will be. And well, in his opinion, reversion to the mean is more likely. And the one thing I'll say as far as that goes, a lot of people say, oh, the PE is high on the S&P right now. It's like historically high. And what they don't really tell you is when you factor in the growth potential of the S&P, it's actually not, it is a little bit higher than normal, but it's not crazy high. It's not tech bubble high. So yes, the PE is high, but you have to look at the value. You have to look at the underlying asset, right? Because a 30 PE on a company growing earnings 10% a year and revenue 10% a year is not the same as a 30 PE on a company growing revenue 50% per year and earnings 25% per year. Like they're vastly different. So that's something that when you look at just PE and you don't look at anything else, in my opinion, it's misleading, right? Now, again, not that it doesn't have some value. And I do think that the stock market is overvalued. Don't get me wrong. I just don't think it's some once in a generation bubble that a lot of people like to think. There hasn't been a serious market correction in about 16 years. Again, this is highly questionable because when you look at bear market, right, the official definition of a bear market, I believe, is 20%, and that's happened. I mean, that happened in 2022. That almost happened this year. I think we got like 18 or 19%. Happened in 2020. I believe it happened in 2018. So this idea that what makes you think that 50% stock corrections are a normal thing? Because if you go back 50 years, they're really not normal, right? They're normal going back in like the 1800s and, up until like World War II. But if you have to say, hey, the last 50 years is more relevant than the 50 years before that. Like, so the idea that 50% corrections are normal things, not that it can't happen again. It will happen again at some point. But the idea that it's a normal thing, in my opinion, is just wrong. Valuations are high. Again, I already got into that. Valuations absolutely are high. I absolutely do believe the S&P is overvalued, but I don't think it's crazy. And again, the reason for that is when you factor in the growth estimates for the market, they are higher than normal. And that is why the market is trading at a higher premium than normal, I believe. Not that we can't see a 20, 30, 40, 50% pullback. That very well could happen. What I'm simply saying is it's less likely than these people are making it out to be. And when you look at like take NVIDIA, for example, right? NVIDIA is the largest company in the world right now. And NVIDIA is still growing like well into the double digits. Like, I believe it's like 20, 30%. I think revenue is growing even more than that. So NVIDIA is still growing very fast. And obviously that's not sustainable long term. I think that goes without saying. But when people compare what now to the tech bubble, a lot of those companies, a lot of them weren't even making money. I believe some of them like barely even had revenue. And you're comparing that to a company like Nvidia, which is like literally like tens of billions of dollars every quarter. So I think that it's more misleading to say that we are in a massive bubble right now than it is to say that stocks are actually at a fair value right now. My opinion, obviously I could be wrong there, but the likelihood that and my reason for saying that is the likelihood of stocks being 10 or 20% higher in a year or two than they are now, than stocks being down 40, 50%. Like if you had to put your money on one or the other, let's say 2 years from now, 20% or more higher, or let's say 30% or more, or even 40% or more lower. I'm putting my money on higher. And frankly, it's not even close. That's just my opinion. Another thing that kind of gets me about these kind of people is I remember them saying for the longest time that, whatever the number is, it's like 30 or 35%. I could be wrong, but I believe that's the number of the S&P is made up of the Mag 7. And people saying, that's proof we're in a bubble. But now they're saying it is specifically this guy, but again, this is a very credible person. The problem lies in the other 493 stocks, which are highly valued despite not producing the same results. So I've been hearing for literally 2 years, right, going back to at least 2023, that these top companies are so overvalued and they're causing this bubble, and their makeup of the S&P is way out of proportion. But now they're saying, it's the other 493 companies. Like, it's kind of hard to take these people seriously when they can't even keep their arguments straight. Now, again, I'm not saying that they're completely wrong. They could be right. Investors are extremely bullish. I've been investing for about 4 or 5 years. I'm not sure exactly when. I don't remember for sure. But I remember people were way more bullish and way more risky back in like 2021. Like, I mean, how many people are gambling on altcoins compared, back in 2021? NFTs, like NFTs are completely gone. And even like people like, trading with leverage and those kind of things, like it probably is above its historical norms, but I still think it's not where it once was. So I think that people are probably a little bit more bullish than they should be. But I don't think it's insane, like once in a generation, like, craziness, right? I'm not raising an alarm bell, but I do think it's time for some caution with stocks hovering near all-time highs. So again, he basically says, it's probably time to, de-risk your portfolio. So what is my takeaway here? I think that they could be right, but I don't see the market being that overvalued. We are overdue for a correction. I've been saying that for probably a couple months now, but the likelihood of it being like 30, 40, 50% is pretty low. It's probably going to be 10, 20, 25%. And the other thing too is that we're at like a 97% chance the Fed cuts rates it's going to be like a couple weeks. So when you're going into a Fed cutting cycle, and not to mention too, they're ending, like they're already doing a little bit of QE, I believe. They're for sure ending QT from what I've heard. It's what is the likelihood that stocks go significantly lower? I could see them going lower, but I don't see it being a massive correction. Now, again, I could be wrong. I'm simply saying the balance of probabilities suggests. So let's talk a little bit about MSTR. Obviously, the big news is they were not included into the S&P 500. This is not overly surprising. I think that the big sell-off in MSTR recently has been some insiders that already knew this. That's my best guess, because there's no other reason that it should be selling off to the extent that it is. But another thing to keep in mind is I seen someone post that it actually took, I think, the second or the third time for Tesla to get included. Not that I'm saying they're directly competitors or comparable, but you have to keep in mind that you don't always get in right off the bat, right? You really don't. I never really heard a good reason for this. I should have read up further on this, but I kind of just scrolled on Twitter for a little bit and read a bunch of posts. I never heard a good reason, but it's almost certainly due to, it's too risky, it's too this, it's too that. Something involving risk and volatility. It's only a matter of time. I would be very surprised if, a year or two from now, they're not in the S&P. Especially by the next halving cycle, like they're going to go higher. There's going to be a massive blow off top, and eventually their hand's just going to be forced. Like they're going to be forced to do it. I think that this is just a buying opportunity. I mean, they're already in the Nasdaq. They're in VTI. They're in VUG. They're in the Russell 1000. Like they're in almost every big ETF and index already. Obviously, the S&P is by far the biggest one. That's a fair point, but it's only a matter of time. Like they're not going away. They're only going to get bigger, and it's only a matter of time. If I'm being honest, I really don't care because this just gives me a chance to buy more shares at a discount. It really does. And what people don't realize is when they inevitably are included in the S&P, I've seen estimates that say it's going to be about $20 to $30 billion in passive inflows just by default. And that would be, they're a little over $100 billion market cap. So that implies that's like a 20, 30% upside right there. Like within a matter of days, they're going to be up 20 or 30%. And not to mention too, I think that they're probably going to get more hype than the average company does. So they're probably going to be up more than that. So the next one is the first week of December, I believe. So we'll see how that goes. I think that Bitcoin's going higher. I think MSTR probably goes higher. Not that I think for sure they're going to be included next time. I'm simply saying it's inevitable they get included. It might be a year or two or three, but they're going to get in. They're going to get in. From Documenting Sailor. So this is the average Bitcoin price return by month. And if you look at it, something that sticks out right away is October and November specifically are by far the best months. October is almost twice as good as the next best month, and November is more than twice as good as October. So what does this say, and what does this signal? I think we still have room to run. It might be not a whole lot. It might only be like 130, 140, but if I was setting like an over-under on how high we go over the next year, I'm going to say like 170, 180. And that obviously is more bearish than I was expecting. If you'd asked me a year ago, I was expecting like 250, 300. I'm not going to lie, but we haven't quite gone to where we could have gone. And people ask, why is that? The best theory I've heard, obviously we have no way of knowing, but the best theory that I've heard is we've seen whales that have dumped like large amount of coins recently. We had the one whale that dumped 80,000. I think there's another one that dumped 30,000. And I think what it is that there are some people that made a lot of money, and their mindset probably was after the last cycle. Maybe I'm guessing that they expected things to run further last cycle and they didn't sell at the top. So they're like, hey, I'm going to wait until the next cycle and I'm going to front run the downturn. And most people know that the high in Bitcoin typically is about a year and a half. Usually it's like November, December, hence why November is like the best month. Usually it's like November, December of like that second year, right? So the last halving was like April of 2024. So that would imply November, December 2025 is going to be the top. Before that, it was May of 2020, I believe. I believe November of 2021 was the last high. So I think what people were doing is simply saying, I want to sell. I've made a lot of money. I want to retire. I want to, buy a mansion, buy some cars, buy this, buy that. But I want to front run the downturn because I don't want to get caught with thinking that we're going to run up more than we expected. So that's what I think happened. Obviously, that's just a theory, but it does make sense when you think about it. But again, obviously, it is just a theory. But the one caveat is I do think we have not seen the high from this cycle. I really do. We're going into a rate cutting cycle. October, November historically are the best months. So I still would be very surprised if we don't see at least like $1.30, $1.40, even $1.50. Like $1.50 is my bear case for this cycle. But the one thing I do think also is that I do think cycles are going to be a thing of the past. Not that we're not going to see corrections, but I think they're going to be less than normal. And again, another thing that when people say, oh, yep, that's a sign we've seen the top, when people are saying there's not going to be any bear markets anymore, that's not necessarily what I'm saying. What I'm saying is that they're not going to be as pronounced as before. And the reason for that is, number one, we've seen historical amounts of buying from the treasury companies. And number two, the halving is becoming less and less relevant because the amount of new coins coming online after every halving is becoming less and less and less and less. The first halving, it was literally 50 Bitcoin. It is now 3.125, right? 3.125 is a hell of a lot smaller than 50, which means just basic math is that the halvings are going to become less relevant, which means these cycles are going to become less and less relevant and less predictable, I think, as well. So that's another thing to bring up. Speaking of the treasury companies, they're now over 1 million Bitcoin, right? Over 1 million Bitcoin are now owned by the treasury companies. And I believe it was a month, maybe 2 months, where they crossed 900,000. So you have, let's just be conservative and say the treasury companies are buying 100,000 Bitcoin every 2 months, right? Every 2 months. That's going to imply that they're going to buy, that's going to be what? 600,000 Bitcoin. That's going to be over 1 million Bitcoin over the next year. Now, again, obviously, if the price goes up to 200,000-300,000 a coin, it's going to be a lot harder for them to do that. But how do we expect there to be a major correction when the treasury companies, let's just be conservative and say they're buying 50,000 coins per month? Where are 50,000 coins going to come online to be sold per month? Now, again, the one big caveat is I think that if we do see a major correction, it's going to be because of the stock market. I don't think it's going to be because Bitcoin. I think it's going to be because of the stock market. If we see like a 30-40% pullback in the stock market, that could be a 50-60% pullback in Bitcoin. I definitely see that. But if the stock market, doesn't have any more than like a 10 to 20% correction over the next 2 or 3 years, I'd be shocked if Bitcoin has more than a 40-50% correction, and that might even be too bearish. So that's just my thoughts. Obviously, I could be wrong. And the last thing here is Strategy declared cash dividends payable September 30th. The X date, I believe, is the 15th or the 14th. And they're also raising their dividend on STRC from 9% to 10%. Like I've said time and time again, but I want to reiterate because I think this is super important. This is, again, it's been called the iPhone moment, but I really think we're going to look back 10 or 20 years from now and think of this as just an absolute thing of beauty. The idea that we can get paid 10% on preferred shares that are going to have very little volatility. Not that they're going to have no volatility, but they're going to have very little volatility. We're going to look back at that and think of it as an absolute thing of beauty. Like, why in the world do people have money sitting in savings accounts and GICs and CDs and T-bills or even bonds in general? Why in the world do you own bonds when you can get 10% on STRC and STRF? It's absolutely insane in my mind. You can literally get double the return with 10% more risk, right? I think it's absolutely insane. Very few people have caught on to this. And I also think that, again, this is going to prove very good for Bitcoin and the treasury companies, because this is going to provide them with a steady stream of capital to buy the Bitcoin. The Bitcoin's going to go up over time. The capital is going to keep coming in, and people are going to like you can get this 9-10% return on preferred shares that have very little volatility. Like, it is an absolute thing of beauty, and Again, we're going to look back at this 10 or 20 years from now, and people are going to be like, why in the world did I have money sitting in a savings account? Why in the world did I have money sitting in GICs, in CDs, and in T-bills when I can get, I mean, it's more than double the return right now. It's absolutely insane that people are still parking money in those assets and in money market accounts as well. That's obviously the big one as well. So anyway, that's what I wanted to talk about today. Like I mentioned at the start of the video, please like and subscribe. If you haven't already, check out those links below and stay tuned for more.